The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone, on this Wednesday, the 6th of August, and we're looking at the Dow up 39 at 44,153. I've drawn in this pattern here where I'm anticipating that the 9-period moving average, which went underneath the 14, is showing kind of some weakness, and that there should be, I'm just trying to make this clear so that you can see it, some kind of a rollover here in the H pattern. Doesn't have to be, but this is kind of what I'm looking at. Let me just find that. Let me just show you this first of all. I'm going to be doing a webinar. This is for the opening course subscribers, live subscriber webinar announced identifying trend changes and what action to take. Tuesday, August the 12th, 4 o'clock to 5:30 p.m. It'll be archived. But I'll be talking about the Chapman technical tools that help identify trends. Oops, there's a D missing over there. And trend changes, sector rotation and stock selection, trading around core positions, using money management to maintain your capital. I think capital preservation is absolutely imperative at all times. And I'll also be talking about, I will answer questions immediately as they come up, because I think it's very important that if you're doing some kind of a talk that is involved in discussing techniques and prerequisites and requisites for in this particular technique, what you do to trade or to get positions, answering a question immediately is absolutely imperative. And actually, the funny thing is, very often it's a position that someone else a question that they would have asked. So it's always very important to answer them right away. So, and in my newsletter, I give a very thorough newsletter every day. I always show this. Where did it go? Where did it go? Oh, right here. I always show the Dow chart and what I'm looking at in terms of, oops, I'm about to sneeze. One sneeze coming up. Haven't done that in a while. Me and like Dave White used to compete, I guess, for enough sneezes during programs during the week. So I do this every day. Look, I show you the chart of the Dow. I use this as kind of a benchmark, even though I'm looking at everything else, all the different indices, and I discuss it. Here's the daily chart and the 120-minute chart. This one has moving averages plus the Chapman wave notation. This one has the moving averages plus the 914 and the MACD, the stochastic, and the on-balance volume. There is also a 120-minute chart right here, and I discuss exactly what I'm looking for. For instance, today, I discussed that what we're looking at the resistance of the 9-period moving average, and that there should be kind of a bit of a rollover. And if there is a rollover, we'll be seeing the H pattern. What is the H pattern? This is the H pattern right here, where price comes down. There's always three patterns that I'm looking at: straight line up, straight line down, cup formation, arch formation. So a mix of 1 and 2 and 1 and 3. In this case, 1 and 3 is where you get the dreaded H, where you've gone straight down, then you have a rally and it fails. Look, a rally and then it fails at a peak A or B. I didn't put it in because it was too messy. A peak A failed, took out the left side low, and now we're looking to see, is there going to be a failure pattern? So far, the market's held really well. So we are short all the way from about a week ago. So we got that big move to the downside, and that will be our cover. If it comes back to that level, then we'll just have to redo everything. But I am looking at the 9-period moving average week under the 14, the MACD week. The relative strength has bounced a little bit with the price. The stochastic is still very weak at 38%, and so is the on-balance volume. There's a daily chart. So the pattern I'm looking at is this H pattern. Does it fail at a peak A or even a B, and does it start to take out the left side previous bar's low, and then the next one, etc. We'll see. This is a work in progress. And so my webinar is, how did we go about identifying that? What are we looking at in terms of resistance levels, how each sector, for instance, I had a choice yesterday. The day before, we went short the SMHs via the SOXS on a fantastic move to the upside, and we made money. I wanted to do it yesterday, and the exact level that I would put the SOXS 3 times short at 450. Sorry, not 450. It was at 750. Would have been hit exactly. And here we are trading at 818. That would have been a great, great trade. I just, for being waiting for advanced micro devices, even though in my show, I said I'm anticipating that at this particular point tomorrow that advanced micro devices is down. Well, it isn't down. It is plunging. It's down 11. At 100, what is down? 163.21. It hit 182.50 just 5 sessions ago. Not an all-time high, but a most recent high. Not only that did it hit it, but it had 173 round number low. I'm always looking at those round numbers, and here we are at 163, 10 points lower than the round number low. So I'm always looking at that. So I'm saying that the SMHs, to me, are forming, and this is kind of a hint at what I'm looking at. I've been looking at all for about 2 weeks now, that we're starting to see that maybe we're anticipating it in June. And June, we did get a pullback at the very beginning of June, but very momentary, and then we went to higher highs. But I'm anticipating that in August, this first part of August is very choppy, and that's what we're looking at. But we won't really start to pull back sharply until we get a pretty serious takeout of the lows that were made either for this past Friday or most recently. So that's the way I'm looking at it. So the SMH is work in progress. The 9 period hasn't gone under the 14, but I think I mentioned for a while now that we're going to make a peak B. And it's probably this week that we see no new high in the SMHs. And that's just going to be a hint to say, all right, now start being careful. That's all I'm saying. But weekly charts are fantastic. So I'm saying just be very careful. I just want to check this here. Made a peak E and then an F right there. And almost, I've been using the Fib a lot. There was a period years ago where I used to do the Fibonacci numbers. And then I found that my own work just did much more. It gave me more information. But lately, I've been finding out. I've been just working on it much, much more, and I'm starting to find a methodology that, at least for my technique, is starting to work a little bit better. I'm getting close to those levels that I use the Fibonacci expansion, etc. So that's important. Okay, now let's do this. So where are we right now? I just need to get back there. Okay, so I'm talking about the semiconductors. Look at the QQQ. The QQQ has semis in it, but it's still up 240 at 562.70, made a 574.63 all-time high 5 sessions ago. That was the 31st, and now look at it. It's kind of struggling. This is going to be a gray A. Why is it gray? Because the technicals are very, very weak, even though it's within just a small percentage of an all-time high. It has not given a sell signal yet, but I'm anticipating that this 9-period moving average by Monday or Tuesday actually goes pink, and then we start to pull back. Just a pretty reasonable breather. That's what I'm anticipating. It could accelerate, but we want to be in position, and that's what I like to go with subscribers and talk about, to get into position to be ready for these pullbacks. I'll be right back. Basil Chapman, Title Nations Hour. Dow's up 13, S&P's up 14.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So let me just get to this question about the dam. Let's see. There's a question about Sempra Energy. SRE is a symbol down 61 cents at 81.76. So the daily's made a peak E with very strong technicals. The weekly has gone to a leg B. The technicals are really improving, so this is all good. Pushed away from the 200 period moving average, and the monthly chart made a peak F. And that was at about 95.77. Yep, 95.77 back in November of last year, and then cascades to the 62-ish area, 63, and now it's at 81.76. So I think it looks to me like it's just a little digester phase. Chapman Wave red Roman candle the day after this recent high of 83.49 on the 4th of August. Yeah, doing very nicely. Now, what I would normally do is I'd just grab the outer edges of the wicks right there and right there. I say, hey, it looks like it's trading in a rectangle formation. And from the technicals that I'm looking at from the on-balance volume, even if it pops a little bit higher towards 84, my thinking is that within a week it'll be trading back into the 80s. So I think it's sideways. Right now, it's done very nicely. I'm not sure the parameters. That's what you wanted to know. So the real parameter is this ugly candle of Sempra Energy, SRE, of the week of the 28th of February, where it had a high of 87.60 and a low of over 23 points lower at 64.89. So as I see it right now, the fact that it's gone way past the halfway marker of the big red body and it's gone nicely over the peak A in leg B suggests to me that this 77.02 high of the week of the 30th of May, that's kind of a very strong support area. It coincides with the 78.43 9-period exponential moving average support. And then, as I say, from the look of it right now, from the candle yesterday to the rally attempt from the body close yesterday, and it hasn't taken out the high, my suspicion is that this is just in a trading range. I'd be a little careful looking out. I think it looks terrific in terms of if it holds support in the 78 area, even 77 in August, and then uses that as a springboard to go back into the 83, 84 area. That's the kind of action you would like. The worst case basis is it actually closes below 78 in August, because that just says, stuck for now. It'll be stuck for a while if it does that because of this particular pattern. But now look at this. What I normally do with the rectangle formation is I draw it in like that, and I say, okay, if you start to make higher highs and higher lows, there should be a really good opportunity for it to tackle the previous high. That's this high right here. So it was a Chapman wave 2-bar reversal, 87.51, week of the 21st of Feb, and 87.60, a little bit higher on the week of the 28th. So that's Chapman wave 2-bar reversal. What a reversal, going from that level down to the 61.90 level. Week of that was the April low, market low. So yeah, so I'm looking at it and I'm saying, look, each rest could take a while. So if this does pull back this week, and at some point it does, Nick, I prefer to say it takes out and closes under 80.47. That's going to suggest a little bit longer, and then it should squeak up to an 85 level, and then it pull back, and then maybe it goes to this. I'm not sure it's going to break and hold very sharply over 87.60. My parameters then are bigger picture, 87, rectangle formations that start to see the price come down sharply and then go to higher highs and higher lows, invariably go to just under, right on, or just above the previous high. That's that high I was talking about in the 87s. And that's usually at a peak D, and then you've got to be careful. So that I'm looking at this, looking out, it looks very good. Just don't want to take, ignore the monthly chart, which has had more than a 50%, about a 50% retracement from the 95's high down to the 61 low, and here it is at 81. So that's good action, and the 9-period moving average flipped to positive last month, so that's all very good. Okay, I hope that helps you. That's SRE. Next question came in. Was that for me, Marvell? Yeah, look at this. This is Marvell. Fantastic company in the semiconductor area. Did make an all-time high up in the 125-ish area back in January. Then it plummets down to the 40s, and now it's come back to a peak D, a leg D. It should be a peak D, I think. And this is an island reversal. So this island reversal says at some point, if it's able to get back into the 80 level, and it's trading right now at 74.84, down $1.79, that's going to be very important. But right now, that island reversal, meaning there's the island, here's your land base right over here, there's a little pop, and it leaves a gap because it only had 2 bars above that high, and then it gapped down below that high. So that's a gap, and it's very important. All I'm going to say is that further it pushes away from the 200-period moving average, the greater chances of 72 to 74 right now. 72 to 70 becomes a target. I really think the semis are kind of down. I'm so upset. Can you believe if I had that at 750? Yes, I shouldn't complain. Other shorts are doing very, very well. Look at this. We're at 8.27 right now. That's 70. That's 9% in a day. Oh, well, I didn't get it, and I missed it today. I wanted to pull back. We never got it. It's okay. It's on my list. Yeah, okay, thank you. Yes, Zip, I'm pleased that helped you. Next question came in. Duncan says, Astera Labs, ALAB. I don't know if I've noted this. I've seen it many times before. It's Rocket Lab that I do very well. No, I haven't done this. Yes, I have. Astera Labs going to a leg B in the... Oh, this is one... I remember now, I put this in and I said, this is one, I've got an IPO from 2024 in the 60 area, plummets down to the 38 or 39, and then runs all the way to 140 something, comes back down to the 50s, and then whoosh. Oh, I've got to keep this on my list. This is the kind of thing for traders that I really like to have. Let me just put it in here. Let's see. Astera Labs does? Astera Labs provides semiconductor-based connectivity solutions that power AI infrastructure in cloud and data center environments. They focus on high bandwidth, low latency connectivity, enabling the scaling of AI and cloud computing. Their products include retimers, smart memory controllers, and smart fabric switches integrated with the Cosmos software suite for system management. And here it is. It must have had earnings today. It's gapped up 40 points at 175.90. Well, let's go to 175, up 30%. Oh my! And I had this all notated because it was one that I had an instant restart, and I said, I remember this. I use this as an example that when I historically go back in the Chapman methodology, when I've had an instant restart and you get this flagpole and it just goes sideways, if there is a G, consider that G could be an instant restart, so you get yourself always put in a G/C. I can't even see what I wrote there. Oh, G/C. And what did I put in here? Oh, it hit 100.19, pulls back, and eventually goes to a D. Oh, I'm going to do this when we get back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
All right, well, so just getting back, we're going to be looking at this just a little longer. A-Lab is a symbol. This is Astera Labs Inc., semiconductor connectivity and power, AI infrastructure. I remember seeing this some time ago, but then when it took, I now remember what happened. When it took this big dip, that was from the January, and it really pulled back. I mean, it got cut more than half. It was about, where did it go? It went from, I think, basically almost 150 down to the 40s. I mean, that's a huge hit, right? And then I was watching it closely, and it went sideways. I even put in this rectangle saying this sometimes becomes a base using the 914, and then I completely forgot about it. What I did look at was RKLB, a Rocket Lab, something completely different. But that's what I was watching, and that one had a spectacular move going to a leg B, and then it now looks like a peak B maybe this month, we'll see, and peak D in the weekly. So Rocket Lab, something very different. Let's go to ALAB, and I like this very much. Now what do? Nothing. It's up, 183.62 today. Totally long in the 130s just a few days ago. There's no question. You could think of this as a second instant restart right there. It's had one before, way back down there in May, and then it went to a peak. G/C, that's what I was trying to explain. And not only that, it had a 100 round number open, made a high, pulls back, goes sideways. Now, this is something that I've had real difficulty with over the years because it's in flux. I put a down arrow here, but it used time. It didn't use price. It didn't. The 9-period moving average did not go pink. So this, I often have looked at this and said, what do you do? Well, what I did years and years ago is I said, all right, I'll put a down arrow when it looks appropriate, when everything's pulling back. But even if it just uses time, what will happen is if it goes to a higher high and that the next high is clearly just a D. There's no other way I can count it. There could have been, look, peak A, gray A underneath, gray A, then B. But once it makes a new high, I can call that a C. But once it breaks down, I can go back. And then what I do is I put this inflection right here, this inverted little triangle right there, inverted V. And that just says that was technically a down move, but it wasn't purely Chapman wave notation confirmation because the 9-period moving average didn't go pink. So that becomes D right there, that high right there on the 20th of June at 101.82. Then you start a brand new A, little A right there. Then it goes B. That's not higher, so that's still a B. Then it goes C. Then you get your instant restart. Then it goes E/F, G. And here we are, G/C. I always put them after an instant restart, just part of the technique. Nothing technically is bad here. This could still pull back and make another high. This is great. Put this on. I'm going to put it down in big letters, ALAB, and circle it because it's a juggernaut on the upside. The Astera Labs. Now, getting in now is too tough. Maybe. If you want to buy an option or something, that's something separate altogether. So, okay, got that out the way. Next question came in. I didn't finish. So let me just go through. The gold came back from the day's lows. Now it's just down 3, holding beautifully. And the 9-period moving average just flipped positive. But you got to wait for it's a daily chart. Wait for the day to conclude to see if it really is the case. And then the Chapman wave inside track propellant zone says, aha. Gold is holding very nicely. So now this is fascinating because look at gold. There's your peak C. It didn't take out that trough B over there. So that means it's still in play. That C can still have higher highs to come. And it's in a rectangle formation in the weekly chart. And you see even here, do I go to, technically you say, come on, you spent, since you've spent 2-3 months going sideways, surely you should put a down arrow. Well, technically I should, just on time alone. But the 9 is still very, very strong. And this says you could still make higher highs. But technically, this is what I do. I put the down arrow, and I say, this is a case where I might have to change it. Why? Because in the Chapman methodology, the concept is very clear. But every once in a while, you have to just go back and say, I was wrong, it was right, I have to correct it, because you want the very next peak or trough, because you're counting the peaks and troughs, A, B, C, D. You want the next one to be correct. That's all you want, to be having your the technical verification on components that are technically correct, okay? So here we go, that's gold, but look at the GDX. That is 1. Look at that. That is a huge, look at this, going right to the Chapman wave inside track. I'm calling this a leg F. It could even here be another recycle, but I'm calling it F for now on the weekly chart, going right up against the door of this inside track repellent zone, which is 57 to what's rising, so it could be higher. Let's call it 57 to 59. That's where there should be resistance. And look at this monthly chart. And what I did was, here's the GDX. I think this is way, way, way too aggressive. It says by September, we should tag the 66.98. What did I do? I forgot a 6. 66.98 high of 2011. September of 2000. Oh, that'll be 14 years later. It tags it? Well, we'll see. That's if I'm correct, using that as the midpoint right there. It worked quite nicely here to go to that peak E. All right, so that's gold. I think that's very aggressive. 57 to 67, another 9 points in let's call it 2 months. I think that's aggressive. Anyway, this is very nice. We are still long our gold position. Now let's look at silver. Silver right now. Question came in, what about the SLV? I'll get there. The silver itself is up 15 cents to 37.97. The 9-period moving average here hasn't crossed positive, but look at this weekly chart holding really nicely. I think it will go to a D into the 40 level. Right now it's at 37.97. And the key support, really important support, would be at 37, around about 37.50s. That's for silver and SLV. That's where, question came in. So SLV, I have updated. Well, it got a sell mode designation in the daily chart, going from the 35s down to the 33 level, and now it's at 34.23, and the 9-period here again is just about to try to cross positive, but it hasn't. And in the weekly chart, this is E. So I've got a little divergence between the cash or the futures and the actual SLV, the iShares Silver Trust. Next question came in. Oops, where did it go? Yes. Okay, that was great. Congratulations, Rahul. You got that advanced micro devices beautifully. Gosh, I wish I had listened to myself. Yesterday, this time, I was saying, I think advanced micro devices will be down regardless of what happens overnight. Wow, down 14. Oh, and that SOXS is now trading. Ooh, frustrating. 827. I'll be right back. Dow's up 30, S&P is down, up 18. Basil Chapman, Tiger Ignitions Hour. Don't forget my webinar.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I was asked to look at Zeta, and this is one that I've followed by name every once in a while because it just, I don't know why, but it just always felt kind of important. Zeta, I don't know what it is. Zeta Global Holdings. Oh, I didn't put global as Global Holdings. Global. Now, what was the other one? Also in advertising, marketing, tech company, and platform. This is, of course, it obviously has to leverage AI and data to help companies acquire, grow, and retain customers across various channels. Must have had earnings today because it's really just had a little bit of a move up. It's up $4 at 19.86, up 25%. Unbelievable. Totally long at the 200-period moving average of 16s yesterday. Fabulous. Leg D in the weekly chart, leg D in the daily chart, peak D in the monthly going to the 37 area, and then it plunges down to the 12s, and here it is, or 10s actually, and here it is at 19.86. I like this very much. I wouldn't have liked it before. Yesterday I would have said, yeah, it's just stuck. The magnet of the 200-period moving average says it could go up and down like a yo-yo. But until it really pulls away into the 1780s, that 16, what is it? 8, is that a 16? Yeah, 16.56, 200-period moving average is just like a magnet. Well, today did that. And it's in leg D. So it could... Zeta Global, huh? All I can say is that, why is the question there? Could I look at... Oh, where did that go? I think I lost it. I lost the information. Sorry. Who asked me that question? Z? Oh, there it goes. ZETA. I can't remember who. All right, so the question is about Zeta. I can't remember who, but a great action. All I can say, if you're in it, congratulations. What would I do? I'd immediately say, a gift. Yesterday it wasn't there, and today it's up 25%. I'm going to take a little bit off. Just take a little bit off as money management, and that's what I'm going to be talking about in my webinar coming up about money management and sector rotation and what we're looking at, what's been working, what's starting to really struggle and lag. I mean, Robinhood's in that area of struggle. Oh, I didn't do this. Bitcoin right now, where did I go? Did I type in the wrong place? Bitcoin. There it is. So I was a little worried about Bitcoin. Although we still have it, I've taken enough off. We've got a core position. I don't want to mess with this. Yeah, this is making lower lows and lower highs. It's not breaking down. It's up 660 right now, 114,846. As I said, a close below 112,500 says to me, just be careful because now it's making this whole canopy above the 116 area really strong resistance. Today's high was 115,000. So yeah, it's doing fine, but it's just consolidating. That's Bitcoin. Question came. Oh, that was the question. Sorry. Now I know what it was. Just an analysis, and I like it very much. I just don't know if you were in it, but if you're not in it, on the next pullback into the gap between $18 and $17.50, if you see it there, give me a yell and we'll look at it. Why? Because in this environment, anything that's performing so well is worth looking at as more an intermediate term buy, starting positions and then adding to them. But right now, all I can say is that right at this particular point, it looks great. It didn't look great yesterday. It looked very nice, but not great. And now it's too far above where I would say safely. Well, after all, what if you get into here in 1993, and even if it just tests and breaks under the 1855 low of today, there's an empty hole. I have no way of gearing. I could gauge support using the 120-minute chart, but we're talking about speed. The speed at which it gapped up and it's holding, it hasn't even come close to the low of the day. Just says, I know what I'm going to say. If you look at this and you're trading, and I think that we're looking at someone who does some trading, who likes to hold positions, but why not do this? It's at 1990. Today, it's now at nearly 10 minutes to 11. Why not? And the market is trying to hold. Look, the Dow's up 71, the S&P's 200. This is not. I spoke about this, and I said for a real sell signal to sell mode that really perpetuates and creates downside motion, propellant to the downside and momentum to the downside, you've got to have bad news. I don't see anything really bad. This is purely a technical, just an overbought situation in many stocks, and that's what I'm looking at. There isn't anything that is being promulgated in the news saying, tariffs or president or whatever it is that they would talk about. So all I can say is, I like it. I'm going to suggest something. This is a little unusual. After a huge gap up 25%, but the fact that this is the first candle, then we got to get tomorrow. And if tomorrow it actually takes out whatever today's high is so far, 20.49, we're looking at Zeta, Z-E-T-A. If it can push above, especially if it can close tomorrow above 20. What if today's high is 20.49? If it's still 20.49, you've got yourself 2-3 days of pushing higher. And in this environment, you can bet that fund managers are saying, "Ooh, this is good. It's not a single digit; it's a double-digit stock. It's doing very well in this environment. It's the right stock in the right area right now. Start a very small trading if you want. Start a very small trading position. Therefore, if you're taking it's at 20.01. I would have a 75-cent stop with a kind of a trading stop, not exactly, but it's sort of like a trading. As it moves higher, you can raise that a little bit, maybe not in proportion, penny to penny, but you raise it, and just treat it as a trade. And then what I would do, I would put my stop at my entry point, which right now is 19.93, especially if it takes out today's high, and just keep it as a trade. So if you get yourself a point, 75 cents is the risk. If you give yourself a point, you could actually make 1.5 points from the way it's acting right now. If it can hold just about where it is right now, 19.94 through the rest of the day. If it can hold 19.40 on any pullback. So 75-cent stop and just treat it as trade. That's the only thing I would do. And you will get stopped out at some point. I don't know where, but that's what I'm saying. The other thing to do is say, you know what? I can wait. I've got patience. I can wait. I'm going to say wait. But if you wanted to get your foot in the door, I'm going to say, okay, good. And I can't remember. Did you have your foot in the door? Maybe you had it, and I'm busy yanking you. Oh, you sold Zeta and based this A and based on your ABCD. Okay, very good. All that talking. Congratulations. So congratulations on a fabulous move. Peak A, peak B, peak C, and there's your leg D. Good. Okay. So much for that. What a waste of... You really sold it. All right. Good. Next thing we're going to do... Oh, you're out, Marvel. Okay, good. Next one is... I haven't got time to read that. Just checking. Indeed. Good profits, Raul. Very nice. Your thoughts if the Fed cuts rates. Okay, this is worth going into, and I'll tell you why. If the Fed cuts rates, and I think at some point they're just going to be forced to cut, to think about and talk about cutting rates. But we have been looking at NAIL, N-I-A-I-L. And I said, no, I'm not going to get into it here. It's 3 times. DX home builders and suppliers bull 3 times. It's just too much. I'll be back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
So, okay, it's a great question. Let me just finish. I got Piedmont Office Realty. There are a bunch of realty stocks in the low-priced, very single digits that have been showing up in my screamer list. Okay, let me just do this real quickly. So the XHB is 1. The is 1-to-1. The nail is the 3 times long. I didn't want to go into a 3 times long at most and a recovery high since the April low. It's just been going to higher highs and higher lows, and it's already in a D. So I said, okay, let's see what the 1-to-1 is. Well, that's the S&P Home Builders Fund, and that's trading at 107.42. I don't see a 10% move to the upside right now without some digestive phase. So I'm just saying, I'd rather not put $107 to work right now. I'd rather be waiting. So when it comes to the Fed, look at the TLT. Stuck in this range, but just trying to get above the rectangle high. It's in leg C, and that's right there. What's today's action? Let me just check here. Yeah, so look at that. Making a peak C today. It's kind of struggling, but it's moving high, and rates are starting to, look, rates right there are coming down very nicely. It made a lower low in the TBT. So I do think that the Fed, this is doing the Fed's work. I mean, the Fed doesn't have to say anything right now. It's doing the work. So I like what I'm seeing. That's another reason why I'm saying I don't want to be, in a way, we're kind of aggressively short, but we got in right at the top. We got in at the S&P the day of the all-time high. It was on Friday. So we've got some room. That's the whole thing. That's what this webinar is about, to try to explain how you can get some room. And you don't have to get too carried away. We can stop out. We made a little money, and some of it was bigger money, but we haven't taken it. So I'm just saying, let me go through it this afternoon. I'm going to go a little clearer about the rates. As I see it right now, the market is kind of doing the Fed's work, so they might not have to say anything. That's number one. Number two is, this is not just a blanket sell everything, but once the semis start to move down, it's kind of a hint to be careful. I'm handing you over to Steve Rhodes. Check out the front page of TFNN.